Summer vacation season is here, but will the sun shine on the travel sector? This is Sectors Up Close, and we're talking travel. The post-pandemic holiday boom saw soaring travel demand among Americans, but this year some industry data shows people waiting for the last minute to book in the hope they'll get a better deal. US summer flight bookings are down 10% year on year, even though airfares are cheaper, and the airline sector is lagging behind the wider market. Greg Friedman is founder and CEO of Peachtree Group. Greg, firstly, what's going on in the economy that makes people a bit more hesitant to spend on travel, do you think?
Yeah, so it's, within the US, it's a lot of the, discussions around tariffs, really the disruption and with higher inflation, the impact with, just within the US as well. Some of the geopolitical tension has caused people to be hesitant to travel, both, if it's corporate travel, business travel, if it's leisure travel. So it's definitely been softer this year. It's been a little bit weaker, but also, I would say that within the hospitality space or the hotel space in the US, you've seen less government travel as well, just with some of the efforts of the new administration on the DOGE side.
What about inbound travel to the US? Is there any evidence international travelers are being put off?
Yeah, you're seeing strong evidence that, international travel is down. Like, for instance, just travel into the US from Canada is down 20%, since the new administration's taken over. So you're seeing, really a negative impact across, international travel in the U.S. And that does have a really negative impact into certain submarkets. We invest, heavily across the U.S., across the select service, limited service, compact full service, primarily Marriott, Hilton branded hotels, and pretty much, again, most parts of the U.S. And there's certain parts that we're seeing impacted, especially in some of the primary markets, you're seeing a pullback.
Where are the big hotel chains seeing the biggest impact? Is it business travel or leisure?
Yeah, so it's a combination. I would say that, business travel is down a couple of points. I would say that, you're seeing probably more of a pullback across, the transient travel, a lot of that last minute travel. And you're seeing, sort of as you talked about at the beginning, there's been a pullback, just a shortening of the window of when people are actually traveling. So they're really waiting to the last minute. We've seen that 80% of the travel bookings are occurring, within 24 days of travel this year compared to, last year, it was, over 30 days.
Hotels are also facing higher operating costs, aren't they?
Yeah, and that's probably the bigger story here is that because, in general, when you look across all segments, travel is pretty much flat this year, in the US, or, in some cases it's down a couple of points depending on what submarket you're talking about, or it's up a couple of points. But the bigger challenge is operating expenses are up, huge, with labor expense and some of the supply expenses, due to the impact of inflation and so forth. And so hotels are becoming less profitable, this year compared to last year, just due to, just having additional operating costs.
You mentioned labor costs there. Hotels do often tend to rely on migrant labor. Are they seeing an impact from the immigration crackdown in the US?
Yes. So, there's no question. The new administration's been, very vocal about their, need for immigration reform, and what they're doing is causing a lot of challenges because it's, you find that, immigrants tend to be a big portion of the labor pool, within the U.S. So it's non-U.S. born citizens are a lot of the, employees and team members at hotels historically, and when you have less of a labor pool, that's obviously putting, it goes back to supply and demand of labor, and that's putting a lot of pressure on, upward pressure on labor costs, and it's creating that challenge again to find labor. Some of the same challenges we had coming out of COVID as well.
You mentioned you think next year will be a much better one for the hotel industry. Where are the bright spots, do you think?
So I think really when you look at just the lodging space, it goes back to supply and demand. You find that, this is sort of rinse and repeat for us because as a firm, we've been through multiple cycles, and myself as a professional, I've been through multiple cycles as well, but I started the business back in '07. So I feel like this is a repeat of some of the previous cycles, like when you go back to the GFC, the pandemic, or even, what we're experiencing now, you always see this pullback in travel when there is economic disruption. And usually the severity of that economic or that pullback within the lodging space and travel is directly correlated to how much new supply is built. This time around, there's just not a lot of new supply that needs to be absorbed. And so I think, in general, I think when there is a recovery, which I expect, sometime in the mid part of next year, we should be in a much more stable environment, which will allow for all travel segments to flourish. And as that occurs, I think, hotels will overly benefit because there's not this new supply that needs to be absorbed like we experienced coming out of the great financial crisis or even, coming out of COVID and so forth. So I think we're going to be very well positioned. The fundamentals are very strong and just demand in the out years, when you look at just the need to travel, the desire to travel, I mean, there's huge tailwinds to the growth of travel. Travel is expected to outpace inflation over the next decade. And I think that's really a testament that, coming out of COVID, people like to travel, which we've seen firsthand. And I think, as people have the ability to travel, they're going to travel again, especially from a financial perspective.
That was Friedman of Peachtree Group. Don't forget, you can watch more videos on Reuters.com.